Alrighty, so now we're going to look at a multi-time frame market structure example overlaid with supply and demand, of course. Now we're going to look at what is quite an old price action example, but it's the same one that we went through in the multi-time frame market structure lesson in the market structure module, of course. So I just thought it kind of makes sense to reuse that because then you guys can, see how we now use that same process, that same framework, but we're overlaying supply and demand onto that to help us with our trading, right? So what we're going to do is we're going to use 3 time frames: a daily chart, 4-hour chart, and M15, and that's going to be sort of the common theme, right? So obviously we're going to get into the actual trade plan and entries in sort of more detail as we go on throughout the course, but I think it's probably quite useful for you guys to, I guess, understand what it is we're really trying to do here. And it's pretty much, you have your main time frame, or your higher time frame, let's say the daily chart, and you just want to know, like, are we in the impulsive pro trend phase, or are we in the pullback phase, the counter trend pullback phase? Once you know that, you then go down to your medium time frame, let's say the 4-hour chart, and that's kind of the main time frame in which you're forming your bias for. Like, that's the direction in which that's the main bias. That's the main sort of idea you're trying to trade. And then you have a lower time frame execution. So for instance, the M15, and you use that to kind of help time what you're trying to do on the 4-hour chart, but that will become clearer as we go on. So I guess what I'm trying to say here is start to think through the lens of, like, if we were going to enter on the M15, right? So when risk reward is in our favor to use M15. So daily chart, we are bearish, right? We can see big push to the downside. Let me make this thicker. Let's make it black. Cool. So strong trend to the downside, okay. Swing pullback, swing lower low, swing higher high. Sorry, swing lower high, swing lower low, swing lower high, swing lower low, right? Last break of structure was over here. We had that bearish swing break of structure. And now what we can do is zoom in because we know the current range we are within. Okay, mark on your current strong swing high so you always know what range you are mapped in. I won't bother marking on the swing low until we have what we deem to be significant enough of a swing pullback. So we know where the actual swing low is. I don't know why that's gone orange. Show me that a bit more. Okay, cool, whatever. Right, so after swing break of structure, what do you expect? To expect a swing pullback on that time frame. We can look left. Is there any levels of demand? Not really, not until around about down here. It's probably a level I would draw on. Let's do it. But yeah, other than that, there's not really anything too significant. There are, of course, sell to buy wick zones here that we're currently within. So we may see some pressure from here, but it's not really that significant on this time frame. So personally, I don't really bother paying too much attention to those. So yeah, we're expecting a swing pullback. We're starting to fall a little bit more correctively. You can see where we had that fractal break of structure and we mitigated this level of daily supply, right? And we continue down. In terms of drawing that supply, this is kind of another one of those tricky examples where you have the bullish candle, right? So ideally we want to be drawing it on that, but the next candle fails to close below it. So that's where I personally like to, evolve it to the next candle, where then you do get the thrust candle that does actually close below the wick, right? In this instance though, like if I was drawing that and price was coming back in and I was looking for shorts, typically you want to do that, I would cover the high. Like I'd want to have that high covered, and that's pretty much kind of how I would draw that zone for the most part. So we had a bit of pullback into that supply, and then we've had another fractal break of that low, which technically now does give us another daily supply zone here, okay? So this is where, you can continue to keep following that bearish order flow, right? We could potentially get another mitigation and fall to the downside, and that's fine. I would be doing that live market. I would continue to be looking for shorts, but I'm very, very wary of the fact where are we in structure? We've had that daily bust. We're expecting a deeper swing pullback. We're starting to fall a little bit more correctively. So at any moment, we could see that supply fail and we could see that shift in structure. But until that happens, we can cautiously follow those shorts and just be quick with our targets, okay? So let's play this forward a little bit if it will let me. There we go. Okay, so big, strong bullish move to the upside. We can clearly see now that this daily supply zone has failed. Okay, so we have a bullish structure shift, okay, and a supply fail. So that's a good signal that potentially, we're going to get that deeper swing pullback. So we've got a bullish daily change of character. So let me just make that dashed line, right? And I'll move to upside. Now, yes, there is potentially some orders left from within here. And yes, price could tap into here because it's just a chalk, right? It could fill up more orders and it could keep going. There is that possibility. But the fact that, we had that mitigation, it filled up the orders, we came down lower, we then had fresh supply, but then price traded up through that. It caused that most recent unmitigated level of supply to fail, and we got the bullish chalk. That's a pretty good signal that we potentially could now be having that deeper pullback. What also do we have? We now have daily demand that caused that change of character, okay? So we can draw it to the refined pivot candle like that, or of course you could draw it from both, right? Because the candle then engulfs both of them if you want a bit more of that. Some people call that a pivot, other people call that a demand range, right? Doesn't really matter, but you guys can see what I'm getting there, okay? But I'm just gonna refine it to the candle just to be a little bit more refined, okay? So now what we're expecting is potentially, if this demand level can hold, or we start to see price pulling back up towards the premium, right? So we can get on our premium discount tool, right? Whether you want to draw it over here just to keep your charts a little bit more clean, or you can, move it across and you can see roughly the EQ or the premium levels are around there. So in terms of, let's keep this out of the way, just keep it kind of clean. In terms of levels of supply, price could come back up to, right? Let's start with the extreme. It's generally going to be the highest probability. You've got this nice zone up there. Now, yes, again, see, technically price did not close below the low, right? So technically it's not demand if you want to be mechanical. So you should evolve it to the next candle because this candle does close below the low, right? So you could draw it like that. But you see when you've got like a big wick behind it, I personally just prefer to kind of cover it. So that would be the level of extreme supply I'd be looking at. Next level you've got here, right? You've got this pivot, see how it's like the buy to sell. Okay, so that's your next supply range. You got that level there, quite big. So we could refine it to that pivot there. But again, you see how it's got the wick behind it? That's where, to me, I just prefer to cover that as well. So you've got both candles there. That would be your next supply zone. And then you've got this buy to sell range here as well, okay? And again, if you want to, you could refine that, to the inside bar, but I would just be wary of the range there as well, okay? So they're kind of your three levels, roughly, in the EQ. And then there we go. Yes, there could be orders from within here, so I would be wary of that. But the fact that we already had a mitigation of that level, it did its job, right? It made a lower low, and now we've seen that shift. So we've seen that disruption to the bearish order flow there. This is a pretty good signal that potentially could be getting that pullback now, okay? So bullish daily change of character. Now let's see if we can potentially get order flow to look to trade up to here, and then see if we can catch that swing daily lower high. So dropping down to the 4-hour chart, let me just quickly rein these in a little bit for my chart OCD. What do we have on the 4-hour time frame? So nice clear swing structure here, right? Swing lower low, swing lower high, swing lower low, swing lower high, right? And then we just about get, I believe, a break and close below that low. Yes, we do. So let's take our time and draw on our swing structure, right? There's our swing breaker structure. Now you see that daily change of character. I'm just going to hide it from these time frames, but it just so happens that that is where the bullish 4-hour swing boss is as well, okay? So we are now currently bullish. This 4-hour low becomes our strong 4-hour swing low, right? It's strong. Why? Because it's done its job. This big box here is that daily zone, right? So that's the daily demand zone that led to the daily chalk, okay? That's why it's a daily zone. Remember, quick recap, we are only really trying to be interested in what we call institutional zones, right? So it needs to be a zone that has achieved something, right? In this case, we want to see that it's broken structure. For a daily zone to be valid, right? For it to be a valid institutional zone, it needs to break daily structure. Okay, so if you just had a daily, candle, bearish candle that then the next candle closes above it, but it doesn't break any daily structure, it might break 4-hour structure when you go and look down on the 4-hour time frame. But if this high here hadn't broken the daily structure, then it wouldn't be a valid daily institutional zone. Okay, so for a supply demand zone to be what we call an institutional zone or a strong zone, whatever name you want to give it, it needs to break structure on the same time frame. Okay, hopefully that makes sense. So we have a valid strong daily zone. Okay, 4-hour chart swing trend is now bullish. So what do we expect after a break of structure on the 4-hour time frame? We expect a 4-hour swing pullback. What are the two things we can look for to help us anticipate when that swing pullback is going to start? The first thing we look for is a shift in structure, right? So we can look for at least, or the first signal we're going to see is a 4-hour bearish change of character. What's now the other thing we can use? We can look for supply and demand. So in this case, we want to look for old supply zones. So if we look left, where are we? We've got this zone here, right? That inside bar. basically within the this 4-hour range, right? So we have this larger sort of, big, it's a bit messy, right? Big candle and a few candles within it. We've already had a mitigation of that range there, but we can refine it to that inside bar. Now, again, you may want to just be nice and refined to the single candle or include the wick. It's kind of up to you, but we can see price is in there. So we may pull back from here, we may not. Next sort of key level is we have this inside bar here again. And this is another one where you may just want to kind of clean it up a little bit, read between the lines, right? And take kind of to include that wick. So you've got a slightly larger zone. So they're sorts of the two nearest levels in which I'd be looking for potentially price could pull back from. In terms of then where we can look to potentially capture the longs, right? Because remember, the key tip with drawing your supply and demand zones is just kind of concentrate on the current swing range we are within, okay? So we know this is our swing low. Obviously, this is where the high is at the moment. Just look at demand within this leg, right? Don't be kind of spending time looking left and trying to find zones outside of the range down here. Like if there was price action here, there's no point, right? Because we're not trading there yet. Concentrate on this range and then maybe look at one or two of the nearest supply zones to the left of potentially where price could pull back from. And that's it. Don't spend ages drawing on like all of the 4-hour zones up here, right? It's just pointless in my opinion. It just makes your charts a bit messy. Cool. So we start to come into this level. Let's see if the supply zone can hold. But what I'm looking for in this instance is I'm just going to wait to see if we can get a 4-hour bearish shift in structure. So we start to see, a bit of a pullback. Now, if you're trading on the lower time frames, you could start to look for a quick move from within here. But again, remember, just be wary that when you first initially get that swing trend change, more often than not, but not always, but more often than not, price can be quite impulsive and it can move for quite some time before you get that sustained pullback. Or when you do get a bit of a pullback, it can be just a quick one before we go higher. So if you are looking for shorts, let's say on a lower time frame, maybe you've jumped down to the M15 or the M5 or whatever, just be wary that it may be a bit of a reaction before we push up higher, and you're not getting in short in a nice trade and then holding on and trying to push for there, okay? Because then you can take a break even or a loss unnecessarily. But anyway, here's the extreme demand level, and then the only other demand level we've got, of course, is this candle here as well, right? The sell candle before the buy, next candle closes above it, and it leads to a break of structure, right? Both of these zones are valid strong zones or valid institutional zones, right? Because they achieved something, they broke structure. Cool. And what's nice about them, even though we haven't started to have the pullback already, they're both pretty much in the discount of that leg, right? So let's play this forward and see what happens. So we've got a bit of an intraday reaction, but it wasn't enough to hold price, and we've pushed up a bit higher. So I'm just going to delete that for the minute, and then that will become our 4-hour, fractal low, okay? Now, again, price comes into this 4-hour zone. So, if you're trading on the M15 or whatever, you may want to start to look for shorts already. But just, it's a bit risky, right? So we can wait for a bit more confirmation. Nice big reaction. Okay. And let's see, now we get the 4-hour bearish change of character. So that's a very good sign that structure's shifting. The supply level is holding, and potentially now we're going to get that deeper pullback, right? So it's a decent pullback relative to recent price action. So now I'm going to mark this on as my 4-hour weak swing high. Okay, we've had a 4-hour bearish chock, and now we have a 4-hour supply zone, right, that caused that bearish 4-hour change of character. Okay, so very simple forecast. What could we expect? Prices had a bearish chock. Potentially it will pull back up into the supply that caused the chock, and then we can look for that bearish order flow to come back down into that daily demand that had caused the daily bullish chock and had caused the 4-hour demands that caused the 4-hour swing boss. Essentially, we're looking for, this is the demand, right, that stepped into the market to cause structure to shift. That's as simple as it is, right? We've come into an old level of supply. We've mitigated that. Strong reaction from it. We're seeing structure start to shift. The fractal structure starts to shift. So now we can trade that pullback, right, potentially down into this level, and then try and capture that high low to target the weak high. Okay, should all be very familiar with that from the market structure perspective. Now we're just overlaying our boxes, right, to help us time where those potential entries could be. Now, what I'm going to do, just kind of hold all of that in your mind of what I just said on the 4-hour chart, and now we're going to jump down to the M15 to give us a little bit more refinement and timing to see if we can, look for trades. Because if you wanted to, you could enter on the 4-hour chart, right? You don't have to go any lower. Like if you want to enter on the 4-hour chart, you can. Not the problem, but the thing you have to deal with compared to going lower is then, again, you can enter within the zones, we can get tricky with our entries, but just for the sake of keeping things simple, with supply and demand for now, we're just going to assume that we always enter on the edge of the zone, okay? So if we did that, risk to reward is not as great, right? So we'll target that weak high. We've only got a 1.8R. Maybe you can target a bit further because this big box is daily supply, remember? Maybe you want to target up here. Okay, you've got 3R. But if we can go on the M15, right, we might be able to get something like this. We might be able to find more opportunity to short from within here because, again, you could want to short this on the 4-hour chart, but you are taking a counter trend trade maybe, you're barely getting one-to-one risk reward to demand. For me, that wouldn't be high enough risk reward to take a counter trend trade. It just wouldn't. So that's why we jump down to the lower timeframes, okay? Now, if you are someone who wants to enter on the 4-hour chart, again, I don't want to put you off it. It's just you want to do it at the start of these trends, right? So this would be pro 4-hour trend. You want to be getting in here, and you don't just really want to be targeting that high for 1.8. You want to be looking for kind of those bigger daily moves. That's what you want to be looking at. You want to be, if you're entering on the 4-hour chart, you want to be using that to time daily moves. If you're entering on the M15, you want to use that to capture the 4-hour move, if that makes sense, right? Okay, cool. So bearish 4-hour chock. Let's look to see if we can play pullback into demand, and then let's to see if then we can capture the pro 4-hour move to target the week 4-hour high, right? So jump down to the M15 and let's see what we can see. So I'm going to just rein in, spend a little bit of time just doing some chart hygiene because I think it can really help so you don't get lost and you don't just have boxes everywhere. It's good to try and keep your mind fresh of what's going on, okay? So this is our 4-hour swing low, okay? This is the range we're playing within. This is our 4-hour swing high. That was our 4-hour bearish change of character. That was the 4-hour supply that caused the bearish chock, okay? And we're looking to see if potentially we can get moves into 4-hour demand to then try and capture that 4-hour high or low to then target that 4-hour week high, swing high, and beyond, potentially up to daily supply, okay? We've got a couple of levels in which that could potentially happen. So that 4-hour bearish change of character, which is this level here, what is that on the M15 in this instance, right? You can see nice big swing pullback on the M15, swing higher high, and then we have shifted bearish. I'm just going to bring it back just a few candles to where the boss occurred. Okay, let's draw on that swing low. All right, and this was our swing high here. Okay, so M15 has switched bearish. Let's zoom in. So let's think about how we can trade with the M15 to capitalize on the 4-hour swing pullback. So this becomes our strong M15 high. Okay, I know it can seem really over the top to do all of this, but when you're in the live market, constantly having your templates all drawn out, knowing where your strong ranges are, knowing where your current strong and weak structure is, it really helps you to not get lost in the source. Because it can be very, very easy to do so, especially when you get more complex and sort of range-bound price action. It's really good to always, have your compass, have your lighthouse telling you, which way you need to be going. Anyway, that was a poor analogy, so let's just crack on with things. So we've had a M15 bearish boss. We're looking to pay the 4-hour pullback. What do we expect though after an M15 bearish boss? We expect an M15 swing pullback, okay? So what can tell us where that swing pullback may start? Well, we can wait for at least a bullish M15 change of character. We know that, but now what can we bring in? We can bring in supply and demand. So if we look left, are there any nearby unmitigated demand levels? Yes, look at this. We have this pivot here, right? So you can clearly see that this level, right, that pivot in price did what? It led to that break of structure, right? That's where the demand stepped in to break that high. Nice bearish candle that before the bullish candle. Again, if you want to be super mechanical, evolve it to the one where the next candle closes above its high. And again, hopefully you've seen me say a few times, when you have kind of a wick like that, I prefer to just include it, okay? So you've got that, it doesn't add too much to it, and that would be a level I would look at. Now, like I said at the start, we're gonna look at this through the lens of entering on the M15. So would this be a type of M15 entry I would personally take? For me, not really, because it's just an M15 zone. It's kind of a little bit random. Like it's kind of just in this leg, it's, yes, it did break this high, but it's kind of in no man's land. We've only just switched bearish, right? Price could easily smash through this. Like it's not, nested within a 4-hour zone. It doesn't have a ton of confidence. So personally, I would want to see if it's going to hold. And what you can look for is are we going to get a structure shift? And then you could look for, okay, now I actually have a bit more confidence, right? To then play that pullback. Okay, that's the type of thing in which you can do. You don't have to do that. You can jump in straight away. You can look on the M1. But for now, just let's think about it through the lens of, does it make sense to enter on the M15, okay? So we're coming down, we now tap into the zone, and let's say you want to trade this pullback, but you want to wait for that M15 bullish change of character, right? So that would be your high there. Okay, so we push deeper into the zone, nice strong reaction, and we get our bullish shock. Now technically you have your M15 demand level that led to that bullish change of character, right? And that could now be a potential level you could look to trade from, okay? Now, again, there's ways you can refine your entries. You can enter within the zone to increase your risk reward, but like I keep saying, we're just going to keep things simple and always enter on the edge of the zone. In terms of targets, again, I'm not going to talk about that too much for now, but let's just keep things simple. And let's say we have a really simple management strategy and we're just always going to target set and forget fixed. 3R, okay? So what are we trying to do here? We have a break of structure, we've tapped into a demand level, we've had a bullish chock from that demand level, so now we're looking to play a swing pullback play up and towards the premium levels of supply, and there's a quick 3R, okay? What you can also do is draw on your levels of supply as well, where potentially price is going to come into. So nice, clean, now this is like a picture perfect supply zone, right? Bullish candle, next bearish candle closes below it. It's at the extreme, nice strong movement, right? That's what you really, this is my favorite type, right? Just clearly supply steps into the market, that pivot in price, right at the strong swing high, beautiful, beautiful zone. And then we also have this pivot here, right? You've got this whole range. It's already had a mitigation of the range, right? But that's massive. I'm going to refine it to something like that, right? And I'll just include the high of the wick. And there you go. You can see that injection of supply into the market that eventually led to that swing boss there, okay? And then you've got this level here as well. So yeah, there's some potential levels in which it could happen. Of course, you can overlay some confluence. We've got premium and discount. So from the swing low to the swing high, and we know all of these are pretty much in the premium, okay? So I'm just going to delete that to try and keep the chart a little bit cleaner, right? So in terms of playing the swing pullback, that could be, a first potential level. Now, when we just talking about it, set the order when price was like that, okay? Now, what you may want to do, and what I would probably advise, is at this point, yes, there's technically a bullish chock because all we need to see is a wick break, right, for fractal structure. But sometimes if you're not sure, just wait for a little bit more. Like look to see, does price really commit to itself and like close above? And that can help you avoid a lot of losses, because sometimes price will come into an old zone. It will just, a bit of a reaction. It might cause a little bit of a wick break, but has price really gone anywhere? Like has supply really failed? Have we really, really shifted? It's not really that obvious just yet, right? Because it could do that. You could get long and we could just dump. Whereas if you see a bit more of a commitment, then you can have a bit more confidence, right? So if you want to wait for a bit more, wait for a bit more, right? Some people may want to wait for a clear candle closure before setting an entry, okay? So now you'd be tagged into this trade. And then you can, again, look for a quick fixed R. And this is a good example of why we always protect our stop loss behind structure, behind the low, okay? Now, in terms of looking for shorts, because really shorts is going to be the most ideal, right? Because we're going to be trading pro M15 trend. There's a few ways you can do this. Something which, again, we'll talk about entries more in the future, but kind of, I don't want to overcomplicate it too much now. Something we call a risk entry is where you literally just set your order on what we call the POI, right? At the point of interest on the zone. And you would just think, right, okay, I'm happy to set an entry order here, or maybe on the extreme, right? And you don't wait for any confirmation. So that would be like, if we took a risk entry here, that would have just been just setting our order here, just looking for price to come into an old zone and just hoping that it's going to work. What we call a confirmation entry is, you guessed it, when we wait for a bit more confirmation and you get like a chock from a level you're interested in, right? That would be your confirmation entry. If you had it entered here, that's your risk entry. That's kind of what we call them, right? So if you're going to take risk entries, I wouldn't just set a sell limit on every single zone. I mean, you can do. I'm not here to tell you what you have to do, what you can't do. It's just, you probably don't want to take 3 losses in a row in case we're wrong, okay? Because sometimes the M15 will switch bearish to have a bit of a pullback, but then the 4 hours still bullish and we can end up going. It's not always going to be respected, right? So if you're going to do it, you kind of want to focus on the zones that have the most confluence, kind of the ones near the top, okay? So I wouldn't personally be looking to set a risk entry here. But for now, let's keep it simple and let's only look at confirmation entries, okay? So we're in this movement. We've now had a bit more of an internal structure shift, okay? A bit more of an IBOS, so we can see, clearer sort of internal structure building. Let's give it that M15 IBOS, right? So again, I'm just going to rein this in, hit that zone. And I appreciate charts can get very messy if you're not used to it as well, when you've kind of got multiple zones through multiple time frames and then you get risk to reward tools on. So try and do your best to kind of find colors and opacity that kind of just try to keep your charts as clean as possible, because otherwise it can get messy very, very quickly, right? But hopefully you can understand what we're doing. We're trying to play this M15 spring pullback up until 4 hour supply. Is this the highest probability trade in the world? I would argue not. It's counter trend. All we've really had is a chock and we're already trading into 4 hour supply, okay? So it's not the best in the world, but I'm just showing you, what's possible, right? What you could possibly do. So if you wanted to follow the strong internal structure, right? This is our strong M15 internal low. Okay, and then this would be our weak internal high. Now you can use dots and all that stuff and make it even clearer. For the interest of time, I'm gonna not draw on everything, but essentially if you wanted to follow the internal structure, what can we do? We can follow it like this up into the more premium levels. But obviously the best time to play the counter trend movement, you want to kind of be getting in at the start of the move. Once we've already pulled back up towards the EQ and 4 hour supply, trading counter trend is getting, obviously, lower probability, right? But, you could potentially, let's just say for argument's sake, let's just do it. you could potentially trade here, right? Would I necessarily advise that against for our supply? Probably not. Risk to reward's not great, but that could be somewhere you may want to look for an entry. Now, this is where, if you're someone who trades on the M1, maybe it makes a bit more sense for you, because then you could wait for a price to come in here. And if you get, the M1 chock and the entry model from within here, then you're going to get in with a much tighter stop loss, right? Because you don't have to put your stop all the way down here. And you could probably squeeze out 5R to like here. So then it can make a bit more sense being a bit more aggressive. So this is where, depending on what time frame you're entering on, although you're all reading the same thing and you all see this M15 POI, if you're an M15 trader, you might have to go, look, the risk to reward is not enough for me to want to target here. But if you're an M1 or M5 trader, then maybe it is, because you can get high risk to reward just trading that move, right? Because your stop loss is going to be smaller. Okay? So that was kind of a point I was trying to make. We're all going to look at the market the same way, but whether you trade that specific move will depend on your risk tolerance and what time frame you're entering on, right? To see if you can get the risk reward. So we take out the week high, and now we're coming into this level. So I personally wouldn't set a risk entry on this short, but if we now came up here, right, and then we got that bearish change of character, giving us a fresh level of supply that caused the choke, okay, now I'll take the confirmation entry and I would get short here, because now I have confirmation and we can look for that move. Yes, if that happens, this is still a strong internal low and there's demand I have to trade through, okay? So it is risky, because you could come into here and then go higher, but because we've now pulled up into premium supply, it's pro M15 trend, right? Because the swing pullback could be over, then perhaps I'm a bit more willing to try and take that movement, okay? If that happens. So this is the thing, right? You're not always going to have everything on your side. Sometimes you have to trade against the internal structure when you deem it to be appropriate enough and when you're happy to take that risk, right? And I'll show you as we go through this. So M15 IBOS, okay? There's all these levels of demand as well on the way. So you can take the single candle, or you can take both of them. Candle closes above both. Nice strong pivot zone. So let's see what happens next. And then obviously you've got, I'll take my time and I'll draw this on. So I think it's worth doing so you guys can see, right? This is now the strong internal low. Okay, so this is how I'd be mapping it if it was live. Okay, so there's your 3R. If you took that counter trend trade, you'd be out of the trade now, right? So cool, happy days. So we're in the supply now. Let's see what happens next. Okay, we pushed through it. So that supply zone has failed. So the minute price trades through a zone, it's over. Capiche? There's no more orders left within it to contain price. So that zone is done. So I delete it from my charts. So now we're going, okay, let's see what happens as we come up to here. Let's see if we can get some nice structure shifting. Okay, a bit of a reaction. I'm not going to look to get involved yet. We don't have any bearish structure shift. Let's see. I'm not going to get in long from here either, because we're at a level in which I expect the swing pullback to potentially finish that swing lower high form. But let's see what happens. Okay, we push up higher. The zone hasn't completely failed yet, but let's see. Okay, so now we're coming into, again, another level of demand, right? Gone a little bit too quickly here. I didn't draw on all my structure, but you see how we've had another bullish IBOS. All right, so that bullish internal order flow is just continuing. And this is why it can save you from taking risk entries, right? If you just wait for the internal structure to shift in your favor first. Okay, so we're still within this 4-hour supply. This is kind of old demand now, right? Because we're currently now in this range. Okay, this is the internal range, right? So we kind of had, this is our structure. And I'm always trying to, for the most part, just keep my zones focused on the current range we're within. Okay, so potentially this could hold and we could come up higher. Or if we see that price break below this low, what do we then have? Then we would have a bearish IBOS. The internal structure would shift bearish. That would give us a very strong signal that the M15 swing pullback is finished. And then we could look to trade in line with demand, right? Because supply has failed, demand has regained control. This would become a strong internal high because it broke the strong internal low. So then we can look to short from strong supply, right? And then we can follow that bearish order flow, keep shorting these strong highs, right? And target these weak lows until we take out the overall weak swing low. Does that make sense? Hopefully it does, okay? So at this moment, again, you could have taken a risk entry on this, but we're waiting for more confirmation because this demand could easily hold and we could push up higher and we could come up to the extreme. So let's see what happens next. So demand's holding, bullish reaction, and there we go, right? So again, if you wait for more confirmation, you save yourself. So that supply zone is now done. So now we're coming up towards the extreme, okay? So you could look to set your entry here. So if you do like risk entries, this is going to be the place to do it, right? Because this level has to hold if the M15 swing trend is going to stay bearish, okay? And then you could weigh up your risk to reward, okay? Over 5R to the swing low, for me, that would be good enough. I like, anything over 5R I think is more than good enough. And then you would target the weak M15 swing low, right? If you wanted to take that trade. So what I'm going to do is let's leave that on there, but I'm just going to move it to the side, right? Just so we can focus on the price action. I just want to keep the charts somewhat clean as best I can, right? So at this moment, we have demand being respected there. And then we have this potential demand level here. Now, it's a bit debatable, okay, whether you call this pullback here an internal pullback. Like you could say that maybe we're still kind of within this range. Some of you might say we're within this range, so it's a little bit tricky, right? But what I want to see in that instance, if I'm not quite sure, is I just want to see like a clear shift, and I'll show you what I mean here. If we get it, right, so there, clear shift, right? Demand has now failed. We have a bearish chock, right? We break and close below that low, and at least we spiked to that low. So for me, that's pretty good confirmation, right? We come up in towards the extreme. Okay, we missed it by about a micro pip or so, which is unfortunate if you set your limit and didn't quite get tagged in. So yeah, a bit of a tricky one there, probably depend on what broker you've got in spreads. But if you miss it, look, now you've got an opportunity with the confirmation entry, because now we've got a strong shift in structure, and now we have supply that caused that move, okay? So there's a few ways you could draw your supply here. Some people always draw it on the bullish candle, right? And then we get the close below. Some of you may want to refine to the inside bar, but again, if you do that, I personally wouldn't refine it to the high. I would include the wick personally, okay? So now you've got your confirmation entry. Let's just, like I say, keep it simple. We're entering on the edge of the zone, stop behind the high, and then you can target this low here, okay? So it's not the most amazing risk to reward in the world, but for a pro M15 trend move after mitigating the extreme with the confirmation entry within 4-hour supply, I think that's a pretty decent high probability trade. And also you may want to push it a bit further, right? You can target down to 4-hour demand if you want to, but let's just keep things simple, okay? Cool, so now let's see what happens. Again, wary previous levels of demand, right? I'm not too worried about them because now structure has shifted in my favor. So what will probably happen is price will come into these levels and we may see a bit of a reaction. Come into these levels, bit of a reaction back into supply, right? And we expect them to fail. Of course, price could come up in here and push higher, but the expectation is that it won't happen. So we come into demand, right? We're not too surprised. It starts to react, but it's just a pullback. It doesn't do a lot, right? I'm not going to be looking to get long here. Why would I not to get long? Because I'm trading against everything at that moment, right? Everything is now bearish. The internal structure shifted bullish to do what? To facilitate the swing pullback to premium supply. Premium supply has now been mitigated. Demand is now failing. Supply is retaking control. The internal structure is now bearish. These are not where you want to be buying. And that's where so many traders go wrong. They now see these demand, they see momentum, and they think, oh, I want to buy here. That's not what you want to do, okay? You want to trade with as much confidence on your side as possible, okay? For the most part. So yes, if some of you may have now noticed, we have had a bullish chock, okay? That is completely valid. Let's draw it on. And of course, now demand has held, and we do now have valid demand here that caused the chock. But look, what matters more, fractal structure or swing and internal, right? Swing and internal, what matters? We've had the internal pullback. We've come up to extreme supply. We've shifted down to the downside, okay? So it's not surprising we've had a bullish chock because price often has a change of character to do what? To facilitate the internal pullback into the strong internal high, and then we go. So we expect that to happen. So sometimes, yes, you are going to have to trade against fractal demand like that, okay? Because this is our strong internal high. Let's get it, all right, there we go. And then, is that going to grab for me? There's our weak low, okay? And that's the direction in which we want to be targeting. Remember, we're trading from strong structure into weak structure, okay? So there's your entry. Hopefully, guys, you can understand what we're doing, right? We're playing the end of the M15 swing pullback. We've got confirmation with internal structure on our side. We're entering on the supply that caused that move, and we're targeting the low, okay? Yes, there's demand in here, but like I'm not really bothered about it because I expect price to change the character for it to be able to pull back to tag me in, right? Price needs to fill up these orders. It doesn't need to, but that's most likely what it's trying to do, right? It's pulling back to get supply to then start that next move to the downside and target that low. Whereas other people see that shift to the upside and they buy here, but they're on the wrong side of the market, right? And they wonder why. Okay, again, if price pulls back, it's okay. Just hold on to your trade, follow your fixed mechanical management. Like I said, all demand zones are going to facilitate those pullbacks. We expect it to happen. Don't panic, right? Adjust your zone. Like this is what can be really helpful, right? Now this becomes our new strong internal high, right? Because that's the high that broke the low. Just follow structure. You have strong structure now protecting your trade, okay? So price hopefully shouldn't break that strong high, right? We expect it to not break that high. We expect it to come in and mitigate this demand and continue lower. So don't panic if you're in a trade and you see price pulling back. Almost a good tip is to delete this if you're in a trade and just map it as if you went in the trade and you understand. You'll see, oh yeah, there's supply here. And then you don't get scared and then you don't make dumb decisions and, jump out of your trade early, all right? So we've got some supply here. Potentially you may want to look for an entry at this point. It's not, looking amazing, but that's definitely a level in which you could look to trade from, right? There could be another entry there. Hey, it just depends on the risk reward and how much you want to like it. Like if you're entering the zone 3.5 RR, that could be good. For some of you who enter it in the EQ, again, we'll talk about this later, that's when you can double your risk reward, but let's just be consistent. You're in another trade. And where are you targeting? Well, the weak swing low, of course, but I just want to draw on the structure. Right, this is our weak internal low. And then boom. Let's see, bit slow. Now, I know it's a bit messy whilst we've got all these trades run on, so I'll tidy it up in a minute. But this is where I think people can, especially if you're on trading even lower than M15 or you see something like this, people start getting chopped up and taking unnecessary trades, because this is when it's just not very clear. Right? This is the internal structure, nice pullback into supply. Break to the downside, pull back to supply. Now we haven't broken anything, and where are we? We're just trading in the middle, right? This is not where, like, you don't want to be looking at trading from here, in my opinion, because this supply has not broken anything. It hasn't achieved anything. It hasn't broken its low. It's probably more likely to hold than demand, right? Because it's trading in line with everything, but this is not where I'd be looking for entries on a lower time frame, okay? This is just where nothing's going on. It's range bound. If you haven't taken it here and you haven't taken it here, then you've missed the high probability moves. This is where I'd just chill out, wait for new structure to form, okay? Now it comes back into that level, so maybe, that's what I'm saying, it can play out, but I just think that's when you want to be taking easy trades, when it's clear, right? These clear movements in price, not when it's trading in between a weak high and a weak low, okay? And then eventually we wick that low, so be out of the trade. So there was a risk entry for around 6R, okay, and then 2 confirmation entries there for about 3.5R, right? But the whole thing, hopefully you can now see, I'll do a super quick recap of that once I just change that to that, was we had the swing breaker structure, okay? Then we looked to play that swing pullback up to premium levels of supply. There are multiple levels of supply we could have looked to trade from, but we waited for structure to shift in our favor. We got that clear shift in our favor, enter from the strong internal high, another movement down. All levels of supply just become reaction points for the pullbacks. This is a strong level of supply, right? These are the pro trend moves. This is when everything's aligned. This is where we want to get involved. Then you've got to be patient for a few days and eventually you get there, okay? And that's it. Problem it gets with people is it's just doing the dumb things in between, like trying to take longs here from these tricky ones which often don't get respected, and then getting chopped around in here and just being impatient. But yeah, hopefully that's kind of clear. Okay, cool. Let's fast forward this a little bit. So if you remember the bigger picture, without me even going up in time frame, and hopefully you can visualize it, remember what we had in the 4-hour time frame? We had that 4-hour swing pullback, 4-hour swing lower low, and then we had that 4-hour swing breaker structure. So some of you may have forgotten the whole time we were messing around in here, right, and talking about this other stuff in the M15. But what we're doing, we're playing the 4-hour pullback, potentially down into demand, to then capture the next 4-hour move to the upside, right? So we were playing that initial move to the downside. We've now had, not quite yet, let's see if we get it. Now we've had the M15 boss, okay? So we can look to keep following the M15 bearish swing structure, right? This now becomes our strong high, right? We now have a new high. And we can keep following this, but we have to understand that the further we pull back into this 4-hour level, by drawing the premium discount from the swing 4-hour swing low to the 4-hour swing high, the nearer we get into the EQ, the higher the probability that this 4-hour swing pullback is over and demand's going to step in, right? And we're going to push up higher. So we do have this 4-hour level of demand, which remember was in that daily level of demand. But let's see now we can see any M15 zones from within here to potentially help us refine that. So we've got this level here, right? And then we've got this level here as well. It's kind of already been mitigated, so that's not the best. You see we've already had that tap into it. So what I would do is I would draw it like that if this was a live market. But if we pushed a little bit lower, right, if we came here and we melted through this and we were like hovering around here and then I saw a shift in structure, I would look left and go, oh yeah, no, we did, okay, we already did have a a tap there, but look, it was only on the edge. There's still probably like you're going to be a ton of orders in here. Doesn't make sense. Yes, okay, then I'll drag it across and then I'm happy to look to get involved. Okay, so use a little bit of common sense sort of in that scenario. And then of course we've got a nice big obvious zone down here as well, and there's some zones within here, but we can cross that bridge if we get there. Okay, so we know this is in the EQ, right? We've had that pullback from 4-hour supply. We looked at how we could trade that on the M15. Now we want to focus more on capturing that 4-hour higher low, right? So let's play this forward and let's see what happens. So we come into demand and then we get a pretty strong, really strong shift. Okay, so we've literally, see this is dotted line, that's the 4-hour EQ. So we pull back to the 4-hour discount Ideally, we would mitigate 4-hour demand. That would give me a lot more confidence to want to get involved. But I know that we don't have to, especially when it's that first initial trend change. Momentum can be quite strong. And also look at this. Like that to me screams big money stepping in, overwhelming imbalance between supply and demand. We have had a bullish M15 shock, right? And there you go. Now you've got M15 levels of demand, right, to work with. We do have this sell before the buy, but it's kind of part of the up move. You have that nice extreme there. This caused the supply to fail as well, right? So you can really see price shifting. Now, what would have been ideal, I don't think, it would have been ideal if price closed above this high, because then you'd have like a real nice, bullish IBOS from the previous internal structure over here. But we're not always going to get picture perfect. But you can clearly see like price smashed up to that supply. And this is a pretty good level in which you can look to capture that potential swing high low. But we have to be very wary. We are still trading against the M15 swing trend. But this is the time in which you can have a lot more confidence doing it. Like this is a lot more high probable long counter M15 trend long, in my opinion, than the one we took over here. Why? Well, because now we pull back to the 4-hour discount. This is when we're trying to capture that 4-hour pro trend move, okay, in an area of 4-hour value, because we're in the 4-hour discount. So this has a lot more going for it than just, a chock over here, right? And there we go. Just misses that one actually on this data feed. So yeah, another would have been another tricky one. That would have been a tricky little period actually. If you took the risk entry there and just got missed, and here, depending on, that would have been a bit tight. Some of you might have got tagged in, some might not. Potentially in a lower time frame, you'd probably get an M1 entry from within here or M5. And there we go. But the idea stands, right? You guys can see the framework in which we're using to know when to trade pro trend and counter trend. Now this whole time, again, look, there's the unmitigated levels of supply. Like we've got these levels here. Potentially price could react from. Yes, a bit of a move. And I'll be wary of all these levels. But probably if price breaks through this, there's nothing really left. Because look, all of the supply has already been mitigated and absorbed. Yes, there could be something from this within this wick, but like if this goes, let's see how it reacts. Yeah, we push up through. Now there's not really much left. Like there'll be some stuff within this wick, but it's pretty much all systems go now to clear of this high if it's going to shift bullish, right? There's no real clear supply left in the way, chop around for a bit, and then eventually we go. So yeah, I won't do any more price action than that because this video has already been longer than I had intended it to. But let's kind of talk about this over the higher time frame. So what did we do? We had the daily bearish boss. We were expecting the daily swing pullback. We got a daily bullish change of character over here. Let's look on the daily chart actually. Okay. Because remember, it stems from the higher time frames, right? And when you get that first, it can really help you. So swing breaker structure, waited for the fractal structure to shift bullish. That gave us a level of demand. Now we actually just missed that level of demand on the daily and the 4-hour chart, which we'll see in a minute. But remember, that's the pivot, right? That's the sell to buy range, which we did mitigate. Bullish daily change of character. Let's see if we can target a pullback up to at least premium supply. 4-hour chart. That daily fractal structure happens to be the 4-hour swing structure. We shifted bullish on a 4-hour swing structure. There were a couple levels of old supply, right? We had this level, we had this level first, but price ended up having a little bit of an intraday reaction and ended up smashing through. And then we came up into this more extreme level, right? Which makes sense, led to that movement. 4-hour bearish change of character, which then gave us this 4-hour supply zone. That's when we then jumped down to the M15 to look to play the pullback into there and then play that movement. We didn't quite tap into the daily zone or the 4-hour zone, which would have been a lot nice, right? That would give us a lot more confidence and a lot more confidence to try and capture this move. But this is a good example of where we're not always going to get what we want, right? And when you're trading pro the 4-hour trend, you can get a little bit more aggressive when the time is right. So we dipped into the discount prices and then we got that move that we just looked at, okay? So let's just dump down into the M15 to quickly recap how we traded that move with multiple potential entries. So that 4-hour mitigation of supply, right? If we look left, you probably even find an M15 zone within here, right? That we come off. But anyway, we switch bearish. So now we can play the M15 swing pullback phase. It depends on how much confidence you want for. This will come with time and experience. I'm not going to tell you that as soon as you get an M15 bullish chalk from an M15 level of demand that you should play the counter trend pullback, okay? Because unfortunately, trading really isn't as simple as that. Sometimes price is going to move down super impulsive. It depends on how the 4-hour looks. Are you trading with or against the 4-hour chart? There's obviously a lot of variables that are going to be involved, and it's something you will gain with more experience. This was quite corrective. It didn't break with a lot of momentum, and we got that 4-hour chalk, so you could look for that entry. If you want a bit more confidence, right, then you can wait for the 4-hour bullish IBOS. We've had demand being respected, then this looks pretty clean. Problem with that though is then you are trading against, we've mitigated for our supply there, so it gets a bit tricky. So this is where I said, okay, just keep it simple, be patient, wait for the pro trend moves. We had sort of 3 key levels of supply we were looking at. Now you might want to set, risk entries on all of those. So you just put your sell limit on all of them. But remember I said, if you're going to do that, at least do it on the extreme or maybe the next one down. Otherwise, wait for your confirmation entries. And it saves you from a lot of losses, right? We come up into supply, push straight through it. We come up into this one, bit of a reaction, but we don't get any shift in structure, right? Wait for a bit more. We continue bullish, we come up into the extreme, and then what do we get? Then we get the shift in structure. Demand fails, supply takes control, enter short, right? Internal pullback, come up into there, there's the supply at the strong internal high, enter short, and then you just got to be patient. There's nothing high probability there really, and then eventually we get the movement, okay? Now, capturing the 4-hour swing high low, is this an easy trade to catch? No, it really isn't. The easiest way to be would be if it was super clean. Like I said, if we came into the 4-hour demand, the 4-hour swing trend shifted bullish, we were then trading pro M15 swing trend, right? That's the way we talk about it in the theory classes to understand the frameworks. And when this happens, I love it, right? This is a super high probability trade. Sometimes we have to trade the market a little bit more, messier, and sometimes we don't have everything aligned, right? But there's still a ton of confluence behind this because it's pro 4-hour trend, the start of the 4-hour move, in the 4-hour discount. This is a strong level of supply. Again, we haven't quite got to this yet, but some of you will recognize that was also an M15 flip. Okay, it led to the string break of structure. There's other liquidity stuff as well, which we haven't learned just yet. And then boom, right, this is another big signal, like big money stepping in. There's a lot of confluence there, and it makes sense. But yeah, hopefully you kind of starting to see now how we're overlapping supply and demand with structure zones. And yeah, hopefully, you guys are not too confused. I appreciate some of these videos are a bit long, but we'll go through this. We'll do tons of examples, tons of trade examples on different price action, and you'll get more and more comfortable with it.